On these and other market trends are two of our regular market analysts, Walt Hackney and Doug Jackson. Welcome back, gentlemen.
Right.
And Doug, all eyes are looking forward to next week, that big report that I just mentioned. What impact is that going to have on the grain markets?
We're going to have a blizzard of statistics next week, and perhaps the first thing we could talk about is that, since the March acreage report from USDA, we've had private analysts suggesting that we have as many as 2 or 3 million more corn acres than what was indicated in March. So the market's finally going to be able to nail down this question of what is planted corn acreage. The innuendo of a larger acreage, of course, has really kind of capped the enthusiasm of the corn market combined with the generally favorable weather. So that's going to be one of the prime things we're going to look at. Of course, we'll get another quarterly feed implication, and we suspect corn feed use may be larger. One of the things that we suspect is that the market is overestimating total corn and bean acreage in this report. The market's trade guesses are looking for more than 2 million more acres than we had last year. And we think through urbanization and other problems that the market's over-anticipating acreage. Now, we're not sure whether it's going to be a corn or bean acreage surprise, but we think they're still over-anticipating acreage. So if you set us back to the ideas that we had originally in March, that corn acreage was not up as much as expected, and then the market's going to want to subtract something from that June report because we've had subsequent planting problems since then, we could, really tighten up this corn situation substantially from what is imagined going home this weekend. But again, a very key report in that corn area. Longer term, of course, it depends on the weather. The market's trying to evaluate this cool and wet pattern. Certainly it's not overly threatening, although we're still not sure what the impact of this, the cool temperatures are. But right now the trade's thinking in terms of something near a record yield, a possible repeat of last year's yield, maybe something better. We're not sure. But if that's the case, and we do continue to have benign weather all summer, and that's a big if, we may have a yield big enough that will dodge the bullet of a substantial shortage and remain in a relatively tight but adequate situation with that record yield, which doesn't leave a lot of downside to prices, but perhaps eliminates the real explosive price potential longer term too. But we've got a lot of summer to go, and we're just going to have to wait and see.
Sounds like a lot of volatility out there as you look ahead.
Well, we do. And the corn market may still, believing that perhaps we're dealing with a 140 to 145 yield range, it still may be a down 20, up 50 kind of an item, which is still a lot of volatility and a lot of weather to go. But that report next week, the middle of the week, is going to be a monster report.
And where are we standing right now in your mind for beans, soybeans?
Well, the soybean situation, of course, we've gone to 10, back to 8 with the China buying problem. Now we've rebounded $1, obviously tremendous volatility. Again, that stocks report, that acreage report, going to be crucial. We're at the point now where just 25 million bushels worth of beans, almost an insignificant amount statistically, but will be critical to our perspective here. The May crush report was a little larger than expected, and right now we might suggest that we're on a glide path to a carryout in the United States that might be 60 to 75 million. Now that's less than half of our previous record tight situation in 1997, something that we've never tolerated before. We don't know whether we can tolerate that kind of a situation, and if so, what kind of price, what kind of market structure, what kind of inverses are we going to have? Now, basis levels are very strong in the United States, and yet beans are $2 a bushel under the futures in Brazil. Clearly at levels that could be imported into the U.S., but rust fears are keeping us from arbitraging that North American tightness against South American supplies. The next thing we've got to watch is whether we can import soy meal. Economically, it can be done, but again, the market needs a big economic incentive to make that happen. That'll ultimately be the thing that probably caps this old crop price advance. But again, the stocks report next week, we could move, and probably will move, 50 cents a bushel perhaps that day, one way or the other, depending on just a small variation of those stocks. A minus residual, finding back some inventory, the suspicion the crop's underestimated, we could break sharply. But anything that confirms the stocks near 400 million or less, which is 100 million less than a year ago, and the smallest virtually in 25 years, could push prices sharply higher again.
So that report could be huge.
How we're going to make our move from this to new crop, which could long-term be bearish, will be very interesting.
And all kinds of pressures in the wheat market, too. Tell us about that.
The wheat market basically is facing a situation where we're going to have a significant rebound in both Western and European production. We're going to face again the return of tremendous export competition from Europe, and the market knows that. The U.S. crop may be smaller, acreage may be smaller, Kansas yields may be smaller, the spring wheat crop's one of the poorest rated in years. but yet the U.S. situation is probably going to be relatively stable, maybe not real interesting. And as we face this export competition, then in Europe, price prospects really may make wheat a marginal feed grain, and really wheat may just follow corn price action. So perhaps of the three grains, the least exciting situation for the time being.
Thanks, Doug. Good info there.